It's a great day for another Testing Your Strategy Live video. And if you're not familiar with what this series is, it is a series where you post your strategy on the Discord, which is in the link description below, by the way. And you go over to the Test Your Strategy section and then post your strategy given the template that is in the original post right here. Today's strategy is from Vane 2600. He's looking at a Bitcoin 4-hour strategy using the 200 and 800 EMAs, and it is long only, and it's actually quite intricate. And this one really caught my eye because the equity curve here looked super impressive. But if I remove my face, I want to show how easy it is to get fool's gold when you are looking at, some of these strategies that are much more long-term and maybe a little bit too relaxed in some regards. So this is a 4-hour strategy, and it only has 33 total trades. So right off the bat, that was a bit of a just warning signal to myself. And then when I go into it, I realized that the first 1, 2, and 3 trades here from 2016 were massively outsized gains that account for about 75% of the overall P&L that was generated by this thing throughout the past, 9 years. So to me, I looked at this and I said, okay, there seems to be something here, like the underlying motor that is driving this strategy. There's something to it, but we need to refine this a bit. And so my goal with this one was to not change it too much and instead keep the underlying motor in this one, but make it so that we're actually trading and getting entries here and there. So I want to say right off the bat that, hey, if you really do like it in this fashion, that's fair enough. That's more power to you. In this case, I guess I wouldn't change anything at all, but I would just, caution that if you're running a strategy like this, the returns are going to massively drop off in modern times. This one's being significantly helped out by these earlier sessions right here. By the way, if I just go into the trades list, you'll notice very, very quickly these early trades were printing. If I remove my face, or actually, no, you can see right here, these early trades were printing, 100,000, 50,000, 50,000, 100,000. And then after that, it's just 1,000, 2,000, a few one-offs here and there. But for the most part, it was very muted. So to me, that was a bit of a warning signal. We'll go through the criteria in his strategy because he really did a good job in laying everything out. And it is a rather complicated strategy, with a lot of moving parts here. But he's looking at the time frame 4-hour. He's looking basically for the past 9 years from 2016 to current, and he is long only, and he wants to enter along when the 200 EMA crosses over the 800 EMA, and then he's using the halving, like the Bitcoin halving seasonality index as another indication for the entry. So he's basically trying to skip the bear market. So I totally understand what he's trying to do. It's a really cool idea. And I think that this could have a lot of merit, especially with people who just want to really be aggressive during bull markets using an indicator like this. And I actually really appreciate him bringing this one up because I didn't know about this fucking indicator. And this is effectively what you're trying to do with most filters. So I think this is quite useful. But on top of that, his risk management is using, yes, an ATR and then a basic risk stop, all these sort of things. And then profit taking, I think it was just, exit long signal when the 200 EMA crosses under the 800 EMA, or if the halving seasonality index is having a negative slope. So I changed around a few things here. Again, here is his original one. And again, the top end stats are like very deceiving because they're really fucking good. And I'm not saying that this wouldn't work. Like if you did start this one in 2016, I guess you would have gotten this, yes. But I think the days of these gains over here are probably long gone, as evidenced by the remaining, I guess like 6 years of that. So what I try to do is I try to relax the entry conditions, get more entries, especially being a 4-hour time frame. 33 trades over 9 years, just very, very minimal, and try to make it more consistent so that we could extrapolate that into the future and say, hey, this thing's probably going to have more longevity going onwards and forwards. And really, I made just some very, very cursory changes here. I'll bring you over to what I did with this one. I'll show you the equity curve first, and actually quite like it. In fact, I'm thinking of maybe I should to put a bot on this one. By the way, we're using the Quant Prime service to backtest all of this. You can try it out for free in the teachable link in the description below for 7 days and figure it out if it's for you or not for you. But basically, this is what I was trying to do over here. I was trying to get this one in a nice, steady, smooth upwards curve and get a bunch more trades. In this case, we have close to 400 here. The profitable trade rate is actually quite similar to the original that he created at 77 spot 32. His was 87 spot 88. And then the profit factor obviously went down a lot because we're getting a shit ton more entries at the expense of that. But again, the purpose here is to just have that steady up into the right equity curve without getting, too excited about, again, what I kind of consider fool's gold over here, in that these early results for the first few trades were really, really good. But after that, it's, not much, which I think is kind of a bad signal for the longevity of that one. So let's go through the changes that I made. Like I said, I want to keep, when I'm doing these series, I want to keep everything kind of similar, just because, the point is to do your strategy, pimp your strategy, not just do my own, right? But here's what I did. I'll scroll down a little bit and let's figure out what we did. I actually took off his exit condition based off of the having seasonality index being a negative slope. So I got rid of that. That helped with loosening up the entry conditions. I kept pretty much everything else. And then I believe, yes, he had the basic risk stop enabled. But what I changed here was, and this is the only other change that I made, I just changed the take profit conditions to include a maximum take profit off of 7%. So when price moves 7% in your favor from your entry, you're taking profit right there. Fine. I mean, 7% on a 4-hour time frame is pretty fucking good in my opinion. And everything else is literally the same. No changes here. And by the way, I'll post this for you, Vane, in the Discord. Maybe you want to use it, maybe you don't. I understand the purpose of what you're trying to do in your strategy, and that is valid. Like, don't let me dissuade you here, but I also want to make this relatable to other people who I think are probably more interested in, I guess more active trading. But this strategy will hold trades underwater for like a long time, just so you know. But again, I am assuming that you're totally okay with that because you're probably using spot or super low leverage. When I say super low leverage, I mean like less than 3x, which is actually a lot of leverage for many people. But as you can see here, this one actually does do its job quite well. It is longing during times of general value, not great timing of that, but it's putting in, multiple entries, pyramiding them here. For example, this is a really, really good example right here. Enters once, enters twice, enters thrice, and then it takes profit on the way up, 1, 2, 3, and then does the next one. But my point is that this one is not like a timing strategy. It's not trying to like time the best entry possible. It's trying to kind of spit some in there and see which ones, stick, and then kind of average around that. And for that reason, I actually thought that it was super interesting. And I think the results kind of speak for themselves here. So, if you are interested in a more like, I guess, scalping sort of style, I mean, can you really call like a 7% maximum take profit of scalping? I don't know, but applying something like that, I thought was the right way to take this one. Again, I think that you could probably take it further than this. To be honest, if we played around with maybe. We don't need a trend filter for this one because it already kind of has one built in, but maybe a day filter, just seeing if there's any like particular days that are really fucking us over here. I'll start with the usual culprits. Usually Thursday and Sunday or Saturday are going to be an issue, but we'll see. You never know until you actually test. Here it is exactly as it was before. Let's try by first taking off Thursday, just because, like I said, that one's like the first one I always try. It just seems to be very consistently bad. And this actually did not make the top end metrics better. In fact, it reduced it by a little bit. So fair enough. I guess we keep that one in. Let's try maybe Monday. Monday sometimes can be a weird day. At least that's what I've seen recently, but you never know until you test it. Let's see. Same thing here, reducing the results. So we like to keep that on. Tuesday is almost always a good day. So I'm going to assume that we are going to keep this one, but again, need to test it out before we move on. And what do we have here? Again, same thing. It's like all of these days are probably necessary is what I'm going to get at. But Wednesday's usually a good day as well for long strategies. Let's see. what happens from there. And yep, again, results get demonstrably worse. Let's go to Friday. Friday can kind of be hit or miss on a 4-hour time frame. So let's see what it brings up. And this one actually improved it a very slight amount. I mean, it's very nominal improvement, very, negligible, but it is an improvement. So, we could run with that as well. Saturday, let's see what we got here. And then we'll try Sunday. But Saturday will give us, badder results. We'll go to Sunday now and see if that changes things. But it seems to me like this one, you could probably leave on for every day. Friday's not making a huge difference, to be honest. Sunday does make the biggest difference, actually, which is rather interesting. I don't think I've actually seen Sunday be that effective before. I did just kind of play around with the max take profit here. I was just using whole integers, so maybe let's try like 7.5 to see if we can make this a little bit better. And then we'll try maybe 6.5, but I think somewhere around here is really going to be right. No, this one makes it worse. Let's go to 6.5, see how this one does. Also not better. So let's keep it right around 7. I don't like to play around with like super, super specific numbers from there. That's when you get into, overfitting sort of territory. I'm going to take off the basic risk stop for now, just to see what happens. I'm going to guess that the win rate goes up. But I'm going to try something else. Yeah, funnily enough, the total P&L actually goes down when you do that, despite the profitable trade rate being 100%. But that's just because you're holding everything like significantly underwater. So you're better off taking, a loss. So with that in mind, let's actually try a max stop loss. I'm going to try 10% at first, and then we'll work our way down, just to see. I didn't prepare this part before recording this video, so I don't know if this is going to help or not. If not, we can always go back to the one before. This one gets us a shit ton more trades, but yeah, all of our top end metrics are, again, generally worse. So let's work our way down from there. Just one at a time. Again, the more like specific you get with these numbers, the more and more issues you're probably going to create for yourself. Actually increase the total P&L by reducing the max stop loss. So we're going in the right direction now. We can go to 8%, 7%, make it a 1-to-1 sort of thing here. But first, let's see what she does. And actually made it a little bit worse there. Let's go down to 7, see how that can do things. Then maybe we try like 5. I highly doubt going below 5 is going to make a market improvement. But again, for people who want more of a scalping strategy, this could be for you. I mean, this is still like in my opinion, like a decent strategy, to be honest with you. Now I'd probably go back up to like 8% stop loss, but there does seem to be something there. But if you're just trying to, maximize your P&L, well, it seems like the obvious answer is to go back to the basic risk stop. Maybe we try a volatility based one. We could do that with BBWP. A lot of the time that can be good. I'll just try 3 here just for shits and giggles, but maybe not shits and giggles, but just seeing. Yeah, okay, that's not going to be great. Again, I think it would be better to just run with this one. That's kind of the best of both worlds, I suppose. But let's try one last thing, see if we can make it better with the BBWP. And what I'm going to do is I'm going to set a take profit condition for when the BBWP is at like a very, very high level. Again, I don't know if this is going to be a humongous improvement or not. It might massively make it worse, but let's see. We'll exit when BBWP gets above 85. We'll start there. Then we'll go 5 on each direction and see where we can take things. But this is one of my tools that I like to use a lot. Okay, now we have something like way different here. Wow. Now we just multiplied our trades by like 4x, 5x. About 4x. Maybe let's try 75. Still profitable though. So the underlying engine that this guy made, I shouldn't say this guy, Vane made, is good. Is very, very good. Yeah. Again, now we just fucking 6x our trades from 400 to 2400. This one definitely losing its curvature there though. So I would say that's not great. So maybe try 90. See what that one does. But I think we're going to settle on what we had earlier. At least that's where I'd settle this one. This one's actually pretty good on the top end metrics. But when I go into it, I don't like the equity curve as of recent. It has not made new highs in a long time. It also hasn't made new lows, so it's probably okay. But are you really going to spend a couple years going more or less sideways on your P&L? I would argue not ideal, but fair enough. So we're going to get rid of that. We're going to go back to here, and we are going to keep things as they were. And I think that's where I'll end on this one. Like I said, I'll post this one in the Discord. This one rather complicated with all the different moving parts. But if I can go through with it on just going through what the conditions are in the skeleton key, well, I got rid of this TGIM upper band. Let's see what actually happens if I put that back on. I actually don't think he had that one enabled himself, but I can check on that. Yeah, would not fuck around with that one. Maybe this one was his exit beforehand as well. Let's see. I can just check the other chart, I guess. Instead of wasting your time with this. This actually does improve things in some regards. Yeah, this actually does make some improvements. I prefer the smoothness, though, of the equity curve before this, but this actually does make some improvements, to be fair. Let's just go back. Let's double check. Maybe I'm sorry. I'm remembering that wrong. No. It actually does make it disimproves it. So nothing there. Our first condition here is going to be that HSI halving seasonality index for Bitcoin must have a positive slope for entry. So that's our first entry condition. Then for our next entry condition, the 200 EMA must be crossing over the 800 EMA. And then he actually had that as an exit condition as well. And I got rid of that one. I really didn't like that one, to be honest. I'll show you what it looks like if you put it on, but that was his original way of doing it. I mean, it's not like that much worse, but it gets rid of the curvature as of recent times. That's what I don't like. That's my issue with these sort of strategies. Like, they're really good at the beginning and then they just kind of tail off into, diminishing returns. Anyways, from there, just basic risk stop. So he's just using, the most recent support level to manage risk on. And then from there, maximum take profit, 7%, as we already went over. And then he has a pyramiding for a pyramid scheme for his entries. He has a cooldown of 3.4%. Enter without signal. So it's just going to enter anytime the price goes down another 3.4%. And he will have two different exits as well. And they will be having a 3% cooldown. Okay. And he's exiting without the signal as well. Yeah. Other than that, the only thing that I changed is the day filter, taken off Friday. I don't think it makes a humongous difference, honestly. You could easily keep it on as well. And I think it's just fine there. The top end metrics are still, very much fine. And in general, if you can keep all of the days going, it's probably better, to be honest, just because, the more sort of complexity that you get with these sort of things, the more sort of stringent conditions you get, there's like a diminishing return at some point where it's like, okay, now you're probably overfitting. In this case, I think that this is pretty fucking safe here, to be honest. Obviously we could go through a lot more testing on it, but this video is probably getting a little bit too long. I meant for it to be about half this size, but this will do. Let's go over some of the metrics before we leave this one off. The average winning trade returning about 9.25%. The average losing trade losing about 12.18%. Again, our percent profitable is 77.32. Pretty fucking good. You're winning most of your trades. But again, I would acknowledge that this strategy will hold trades for a long time, and it will hold them underwater for a little bit as well. So, if you are using very, very low leverage, I can see this as being actually a really good strategy, to be honest. But if you're using high leverage, this is going to fucking kill you. So fair enough. Anyways, I'm going to sign off on that note. Hopefully this one was in some way helpful. And if you want to post your strategies in the future, check out the Discord section here for Test Your Strategy. Follow the directions in this post right here. And of course, if you want to use the same tool that we're using to backtest these things or even set up these strategies for yourself, you can indeed do that through the skeleton, or not through the skeleton key, through the Quant Prime service, which gives you access to the skeleton key. And again, that gives you 7 days free trial if you just want to try out something really, really quickly and see if it's even going to work or not. So we'll end it on that note. Take care, much love, and I'll see you in the next one.